Joining us now, Barry James, Portfolio Manager at James Investment Research. Good morning.
Hi, good morning.
Now, we're talking about the euro. The euro did hit a 7-month high, and we saw Emmanuel Macron win the French presidency. It's come off that high since the election. However, what does this mean, the French election overall, for U.S. investors?
Well, I think, first of all, there's a big sigh of relief in Europe right now. And as that translates back to the United States, I think it's going to kind of be a ho-hum. I don't think really there's that much of a factor. The one thing we could see with this, though, is it does give the European Central Bank room to start raising rates. And so probably our Fed would have more of an all clear in June to do the same. So that would be the one thing I think that could come across the Atlantic to the United States. But we don't really see a major impact overall on investing in the United States.
Well, I mean, here in the U.S., though, you've got a lot of big corporate earnings that are coming out. You've got Disney reporting tomorrow. 80% of the S&P 500 already reporting earnings pretty good, up 13.5% from a year ago. Do you think that this earnings season has been stronger than you expected, and what do you think that means going forward?
Well, I think we've been, in a rebound, if you will, in earnings. Companies had been down for so long. We'd had 6 quarters in a row of declining earnings growth. So that we're starting to see a little bit of a rebound is kind of normal, and it's what we'd like to see. We do see it, of course, with some of the employment numbers and the like, and some of the retail numbers, some of the larger items out there that some consumers have been buying, some of those big ticket items. So that kind of, I think, has given a little bit of help to earnings overall.
We've seen record closes for the S&P and the NASDAQ last week. Quickly, still upside room potential?
Well, we think we're in a topping phase right now. Things don't make a lot of sense to us. The old Marvin Gaye song, What's Going On? We're seeing that very expensive stocks are running and very cheap stocks are not running. The quality isn't really doing very well. Companies with no earnings losing money in the last 12 months ending March were up over 16% more than companies with earnings. And then you have companies like Tesla, a very good company, 4,000 cars sold in March versus Ford, which sold over 200,000, and yet Tesla's worth more than Ford.
Barry, well, we thank you for your insight.
Sure.